All right, what's up, y'all? This is Robbie Creates here, and I'm with my partner in crime. He's a YouTube creator, business partner as well. Go ahead and introduce yourself, bro.
Yeah, I'm Loren. I'm a soccer coach, basketball coach, and a videographer, man. So love to be here with you, brother.
Yeah, man. So there's no better way to start than to start like this, I think. I've been waiting for 3 years to do videos like this. We're going to cover the information that nobody talks about crypto. Knowing this kind of things is going to get you started in a way where you're going to understand the market. You're going to be able to follow the cycles, the thing people keep talking about with the Bitcoin 4-year cycles. You're going to be able to match it up visually in your head. You're going to understand what charts are, what these little bars are. We're just going to get straight to it. I'm going to have my boy here ask questions specifically for y'all so that he can give you kind of the basic take so we can start breaking through this barrier.
No, man, times are hard, man. You can't just work a job and, think you're going to be good with the money and everything, man. You gotta have some other things working while you're sleeping. You gotta make some money while you sleep, bro. And that's why I'm excited about learning this, yo. So
yeah, absolutely. So with that being said, welcome. I'm Robbie Creates with my partner.
And I'm Bags.
And we're gonna get straight to it, covering the S&P 500, gold, Bitcoin, Ethereum, and other crazy assets, especially after the Trump trade. Yo, this is cool, man, because I love being able to do this. And I think I guess what we're really going to start with, y'all, is we're going to start with the S&P 500. And my chart is scary, but we're going to walk through it. That's the whole point of this. And my boy here, he's going to ask questions. And I made sure it's simple. I don't have any crazy metrics up here. It's just kind of some labels and things I keep up with, that we're going to see here. So the point is, is getting this information out in the way where you get truth, where you can see there is history that we can follow, and it provides facts. And these facts create cycles, and these cycles can be played, right? We can invest in these cycles as long as we can see them. So what one thing we want to cover, bro, is I'm gonna refer to you, but hoping the people can take the same perspective that you're going to be able to give when you ask your questions and when I give you the knowledge to this stuff, man. And as always, I don't know everything, right? I just have that basic foundation, but I'm still able to make profit and make, good trades, knowing the big overall cycle. So that's what we're going to be learning today. So I'm going to hit 6 months, right? We're going to go 6 months apart. And the reason I'm showing y'all 6 months apart is because that's going to allow us to see the data in a way where we can understand it slowly, because this data is a lot, and it compresses over time. The quicker we look in, the more data we get, the more information we get, the more things are happening. You see what I'm saying? The more things are happening that are actually relevant, if that makes sense.
Yeah, I got you.
First of all, what we notice, bro, is that straight arrow up. Look at this. This is the S&P 500. You know what the S&P 500 is, right, Boston?
Right. Yeah. The top 500 companies in the world or country.
Yeah, man. In the United States, right? And understanding that if that's the top 500 companies, the S&P is a vehicle that tries to maintain holding on to shares of the top 500 companies. Does that make sense?
I think so. Can you break that down a little bit?
Yeah. So let's say if you invest in the S&P 500, what are you buying? You're buying something that is holding, let's think of it as a piece of pie. This piece of pie has 500 slices, but these slices have different sizes. So when you invest in the S&P 500 and you buy one of them, which is, how much is one? 5,900 right now. Oof. When you buy one of those, you're buying 500 slices. Now, those slices, they weren't cut perfect, okay? Because some are better than others. You know what I'm saying? Some people don't like peach cobbler kind of pie. But most people like apple pie. So the apple pie is way bigger, right?
Yeah, I got you.
Apple as an apple. You see what I'm saying? Some people like that Tesla pie. Some people like, it's no matter, where we getting off topic. But the point is it's top 500 companies, and they make sure that they hold on to those within that pie. So that way, if it's number 499 is doing bad, well, 501 can hop in, 500 can hop in place.
Like a ranking system.
Correct. In a way, not, in a way, in our way to, yeah, exactly, in our way to understand it. Yes, sir. Yeah. So now that you know that, right, Well, that's an investment vehicle that you can, buy. And if you look at the momentum of this over time, you see this little ticker here, right? I see in 25 years. See what I'm saying? And then we see this 6 years, 12 years, 4. What I'm marking here, I'm just marking these kind of like compression trends that the market goes through. But all in all, it's a straight arrow up. That's what's beautiful.
So you're marking where it's flat.
Kind of. Where it's flat and where it's also
like kind of working.
We call it capitulating, right? Well, we call it being volatile. The market's volatile, as in it's when it's really high and it's really when you're down, like rapid, quickly, so it's volatile. So I'm marking those volatile moments. You see what I'm saying? And those volatile moments can sometimes contain recessions, right? Right? Or they can also contain bubbles, aka like booms.
Yeah.
Right? Yeah. So kind of what a lot of people like to do when they study this chart, like myself, is you go back and you look over time at these charts and you match articles to what happened. You look at the price and you're like, whoa, like right here in what's that? 1920, right? Starting in 1923, going down all the way to like, 1932. It literally was just a straight downtrend in the market. And remember, this was the top 500 company. So this is literally just people, everybody that's invested in them, just leaving, constantly selling, getting out, constantly selling. Right. So it's scary. It's a scary moment, meaning the price is going down, reflecting the selling. Does that make sense?
Yeah, it's not profitable. So they're getting out.
They're getting out because the price is going down. And as the price goes down more and more, people get more scared and then they get out more. Right. And that's the FOMO effect. Fear of missing out. You don't want to miss out on, you don't want to mess up and and lose money.
Yeah. Right.
So you FOMO. But yeah. So the point is, at any point, if you have balls, you can just hold on, right? At any point, if you just invest and you have long-term thinking, it seems like the chart is telling you that you make value, right? See what I'm saying? So like, look, in 1970, we're looking at a price of like 92 or something like that around there, right? That's $92. What's the price now? 5,900. You know what I'm saying?
Get a hold of them.
Right. So what it's telling you is that there's a momentum trend of it constantly going up, but it does go through these volatile moments that you talked about, right? These dips, what they call it, or these recessions, or that's where they ultimately end up being. Or when war happens, you can match the war up with the chart and be like, oh, wow, look at that. That seems like something, right? Really, anything major that happens, COVID happens, you take it, match it up with the chart, and you're like, oh, wow, right? Most of these things can be tracked through the charts. That's why charts are so important for us to learn. Learning articles and how people move based off articles is BS. It doesn't, it matters. Sentiment matters, but it's secondhand. You know what I'm saying? This is firsthand knowledge that you can get to understand kind of an overall sense of things. And having an overall sense of things puts you ahead. You know what I'm saying?
Right, like a validation.
Right. So you see the trend of the S&P 500, right? And you can see how we're gonna go over here. See how these markers? This is 2000, right? So in 2000, remember the crash? In 2000, everything tanked and crashed, and it didn't stop until 2000. It looks like 2003, into 2002 to 2003. See what I'm saying? So that's a good marker for me. And then what we talk about when I say volatile is that, see how it bounces up and it bounces down and then bounces, and then it finally clears out to start the uptrend again. You see what I'm saying? So knowing these moments right here is the money moment for me. That's what I've learned. And this is what I'm trying to teach the people out here who end up seeing this on YouTube and other channels. This is the money moments. This occurs every cycle, all kinds of cycles there are, because it's cyclical, but they always occur and they're not quick. See, these are 4 years, 13 years, 12 years, right? 6 years over here. These are times where you can get in, right? Compression zones. You get in on these moments and you're not really going to lose value from those points because the market never kicked back down after that. You get what I'm saying? Once it stepped on that ladder or stepped on those steps, it never went lower. So that's kind of what I'm marking.
Buy when it's low. Absolutely. So basically it's like opportunities to buy and sell and make money in between those cycles.
Well, that's the point of this, right? Because, right, you in the first few minutes, or 10 minutes or whatever, you learn that, okay, I can just buy the S&P 500 and just make money over time. You can be done. That's it. Just pack your bags, go home. You see what I'm saying? But the point of this is we're trying to, we don't have that much money. So we have to make it work. And in all kinds of ways, all the ways our knowledge can tell us. So I'm fortunate enough to gain this foresight, you know, to be able to share this knowledge with you, my brothers out there, sisters out there on YouTube and stuff like that, so that we can all get this knowledge and apply it and make money.
Gotcha. Yeah, it's just like kind of like helps like clear the fog, you know, because a lot of people, like everybody wants to invest and make money off their money, but they just don't know how. So this just clears it up, like exactly what's going on. Was that what you're saying?
Absolutely. Yeah. Yeah, man. Yeah. And this is kind of crazy. Having this chart, I don't need these things. And I would advise anyone when you're getting into charts, there's so many books out there. And now there's YouTube audios, like, and there's people who specifically do it. If y'all hit me up in the comments, I'll tell you the people I've learned from. Right. But definitely. I would suggest like just having these things is just something to visually help you say, okay, what I said was correct. You don't ever want to rely on these things, but you want them to confirm, right? So see how my zones is, I'm telling you this is compression zone. Look how this is, you don't even have to know what this is, but look what this is telling you by eyesight, right? So that's kind of matching up with my compression zone. And I did these without before I, you know, knew the Fu Manchu, you know, whether people want to believe it or not, but that's what this is, Fu Manchu, I believe.
It's just like going up and down, up and down, up and down, and then it breaks out, and it goes up and down, up and down, up and down, red.
Right. Well, remember the compression zone, I told you it's a safe time for you to buy. Meaning you buy in and it's not really going to return to this value again. It's going to go up from there in history over time, period. Right. So if you buy here at the top, right, all of a sudden you have to wait how long before you can get value again? 13 years. See? And now let's look at it here. So we'll look at it here, right? If we buy here at the top, right at 2000, if you caught the crave at 2000 and you bought in, oh man, you got to wait 13 years before you're in volume. And that's how they is, because they put out headlines at the top of that chart, man. You know, it's crazy. So the point is, if you can know that that's happening or just see it later and then maybe be able to play somewhere in here, you kind of compound your value a little bit better, right? I know to some people this may not make that much sense, but compounding your value is everything, right? We're going to go to Bitcoin because you seeing that it's pretty much the same kind of flow. I won't say the same charting, but the same flow, meaning up to the right. All this flow is just so much money, man. It's crazy. You got to know these cycles. So what I have here is I mark the cycles on Bitcoin the same way, not the same way, but the same kind of format, same kind of philosophy, just marked in a little bit, you know, a little differently. So pretty much what you're looking at, bro, is look, $2 in October 2011, 155. These are bottoms I'm marking. 2015, 3,000 something, December 2018. You see this YouTube? Literally 15,000 in November 2022. We are now in November.
Got you ranking the bottoms and the tops. Okay, I got you.
So in between each, we've learned that it's about approximately 4 years, give or take, right? Between each of these bottoms.
Yeah, good. That's crazy. I guess you want to go when it's low.
Pretty much. And that's what I was asking. I was just asking to keep it simple. And you don't even know charts for real. And you can see that, bro, there's a simple pattern here that I can just follow. So that's how powerful this information is.
Hey, yo, we had scanners, why they hit us with a Wells notice. SEC pressures already 11 until they notice. In the back of the court, we're treated just professional. We don't care, we got them already simple. So